Welcome to 1492 Capital Management's website. My name is Joe Frona, and I'm the Small Cap Growth Portfolio Manager here at 1492 Capital Management. Today I have with me Rob Dameron, who is our co-portfolio manager in our Small Cap Growth product, as well as Rodney Hathaway, who is our Small Cap Value Manager. We use this spot on our website to typically bring updates on topical conversations of the day. And today I'm going to talk a little bit about what our view is on the economy and the market generally, and then I'm going to hand it over to Rob and Rodney to talk about some themes that we're working on within our portfolios. We are fundamental investors here at 1492, which means we spend most of our time meeting with companies to understand what the fundamentals are in their businesses and meet with as many companies as we possibly can to gather data points on not only what that company is seeing, but maybe giving us some indications of what implications their business might have on other stocks we own within our portfolio. For example, we've met with over 150 companies here in our offices at 1492 since last November. In addition to that, we've met with another 250 either at conferences or at their place of business. So it's a tremendous amount of data that we gather day in, day out. And we use that data to, again, filter through the information that we get and see what the implications are on current holdings or potential holdings within our portfolio. So I typically get asked on a very regular basis, what are we seeing out there in the market? If you go back to the November through February timeframe, clearly the economy was in a much dire situation than it is today. Since the February timeframe, have really seen a lot more positive tone from management, and I think it's gotten more positive each and every month since March of this year. Now, what does that mean from the market's perspective? Well, clearly the market had a nice rebound since the March lows, March 9th lows. And we sit here today really hovering around the break-even point if you look at the S&P 500 or the Dow on a year-to-date basis. So we haven't really made up a lot of ground on a year-to-date basis. But clearly from what we see, the economy is getting better. It's somewhat dependent on the government stimulus at this point, not only here in the U.S. but also abroad. And with that, I'm going to turn it over to Rob, who's going to talk about the Chinese stimulus and how that's impacting one of the themes in our portfolio, and which is really playing the China stimulus package. So, Rob.
All right, thanks, Joe. All right, so I thought I'd take this opportunity to expand a bit on that China infrastructure theme and some of the numbers that help validate our thesis. So earlier this week, the World Bank lowered its forecast for global GDP from a decline of 1.7% to a decline of 2.9% for 2009. And the GDP projection was lowered for all regions of the globe with the exception of China. China's GDP growth in 2009 is expected to be above 7%. So although China is experiencing a significant decline in its exports in 2009, it has a massive $600 billion stimulus program to subsidize domestic demand in that country. So we communicated through these videos and through our newsletters that over the last 6 months we have been playing this China infrastructure theme. We started the year with about a half dozen investments focusing on the rollout of China 3G, and I'm happy to report that this theme is helping to drive our outperformance so far this year. For example, Anaren, which was one of our featured investments in the Q1 newsletter, it's risen more than 50% just in Q2. Now, we recently sold that stock because it reached our price target. But more recently, we expanded our China exposure to include civil infrastructure projects. We participated in a China IPO this week that provides water treatment and purification equipment, as well as wastewater treatment equipment. And due to the urbanization and the industrialization, China faces severe clean water shortages. The water treatment industry in China is expected to grow 15.5% per year through 2012. So in just 2 days of trading, we're already up 19% on this investment, and we believe there's still significant upside. So one last thing I would mention is that this week was the most active IPO week since May of 2008. And there were actually 4 IPOs this week, and 2 of those IPOs were China-based companies. So we will be looking for more quality investments in this theme as the year unfolds. And with that, I'll turn it over to Rod.
Great. Thanks, Rob. Well, for those of you who have had a chance to listen to our investor presentation, you'll know that at 1492 Capital, within the small cap value strategy, we're really looking for companies that have some sort of a hard or tangible asset value that we can get our arms around. Companies that have tangible book value that is very high. So back at the beginning of this year, we had the opportunity to screen the small cap universe very extensively for stocks that meet these criteria. Good tangible book value, strong balance sheets with low debt, companies that pay a cash dividend. And it just so happens in that screening process, we identified a number of companies in the basic materials sector that looked to be trading at historic low valuations. These are companies that make chemicals, companies that make agricultural fertilizer, companies that process grains, companies that make specialty steel and specialty alloys. These companies at the time were, as I mentioned, trading at historically low valuations on an enterprise value to sales and enterprise value to EBITDA basis. In fact, some of the valuation metrics that we identified were companies trading at 0.2 or 0.3 times enterprise value to sales and trading at 2 to 3 times enterprise value to EBITDA. Just historically cheap valuations. And so we took advantage of that and bought a number of stocks, again, back at the beginning of the year, in this basic materials sector. Now these stocks have done very well, especially over the last month or two. And we believe that some of the reasons driving the performance behind these stocks has been because the demand for the products that these companies make will be used for years to come. We're not going to stop using especially alloys, for instance, in the making of airplanes or nuclear reactors. We're not going to stop using soybeans that are processed into oils and meals that are used in food products throughout the world. And the basic chemicals are products that we're going to be using in all facets of our industry and our economy for years to come. So, a net of this, these basic material stocks have done very well, especially recently in the last couple of months. We think they'll continue to do well and are still at very attractive valuations. So with that, I'd like to turn it back over to Joe to wrap up.
Well, thanks, Rodney. And thank you for tuning in. And we look forward to having you tune in again on July 22nd when we will do our next webcast, which will be an update of our year-to-date performance and attribution, and also provide you with a then current view of our market outlook. Thanks for tuning in. We'll see you July 22nd.